3 blue chip stocks every investor needs to own in 2021. The onset of 2021 has brought with it widespread hope for an economic recovery. With the ongoing deployment of COVID-19 vaccines and a new presidential administration at the helm in the US, investors are optimistic about a solid economic recovery this year. Experts believe that the distress of 2020 will fade out by the end of this year as the services and manufacturing industries return to full operation. Nonetheless, many expect economic sluggishness to continue through the first half of the year at least. This, along with the slower than expected vaccine rollout, might foster continued market volatility in the near term. Against this backdrop, blue chip companies usually perform well. Their business models are typically sufficiently strong to withstand most sudden economic downturns. Most blue chip companies were resilient in 2020. Moreover, when industries restart their operations fully, these blue chip companies will likely benefit from their economies of scale. So, in addition to dodging possible market volatility, these stocks have plenty of upside potential this year. Johnson & Johnson, J&J, 3M Company, and Lockheed Martin Corporation, LMT, are 3 stocks that generated decent momentum last year. While J&J benefited immensely from undertaking COVID-19 vaccine development, found strength in selling huge numbers of N95 face masks and respirators. Meanwhile, the rise of global terrorism and geopolitical tensions have spurred demand for defense products, benefiting U.S. defense major LMT. Each of these companies has unique market tailwinds that we think could drive their stocks higher in the near term. Johnson & Johnson, J&J. J&J is a global leader in consumer products such as baby care, women's health, and wound care. It has a major presence in the pharmaceutical and medical devices segments also. J&J's pharmaceutical segment focuses on immunology, pulmonary hypertension, neuroscience, infectious diseases, oncology, and cardiovascular diseases. The company's medical segment deals with surgical, orthopedic, cardiovascular, and diabetes care. J&J recently announced that its single-shot Janssen COVID-19 vaccine candidate has met primary endpoints in interim analysis of its Phase 3 Ensemble trial. As of day 28 of the trial, the vaccine candidate is 85% effective overall in preventing severe disease and has demonstrated complete protection against COVID-19 related hospitalization and death. J&J's revenue during the fourth quarter, ended December 31, 2020 rose 8.3% year-over-year to $22.5 billion, driven by substantial growth in its pharmaceutical segment, followed by consumer health. In the pharmaceutical segment, STELARA, a biologic for the treatment of several immune-mediated inflammatory diseases, DARZALEX, for the treatment of multiple myeloma, and IMBRUVICA were the winners. However, J&J's EPS for the quarter declined 56.7% over the year to 65 cents. Analysts expect revenue for the quarter ending March 31, 2021 to be $22 billion, representing 6.2% year-over-year growth. Its EPS is likely to grow at the rate of 5.3% per annum over the next 5 years. J&J climbed 6.8% during the past year to close yesterday's session at $164.95. Over the past 6 months, the stock rallied 10.8%. It is no surprise that J&J has an overall rating of A, which equates to strong buy in our rating system. The ratings are calculated by considering 118 different factors with each factor weighted to an optimal degree. J&J has a grade of B for sentiment, value, stability, and quality. Of 239 stocks in the medical, pharmaceuticals industry, it is ranked number 8. In addition to the ratings grades I have just highlighted, you can see J&J's ratings for growth and momentum here. 3M Company, through its safety and industrial, transportation and electronics, healthcare and consumer segments develops, manufactures, and markets various industrial products. Industrial adhesives and tapes, display materials and systems, electronic materials solutions, medical and surgical supplies, as well as home improvement and office supplies are some of the products manufactured and marketed by M plans to contribute $100 million, $200 million to its global defined benefit plans in 2021. During the last year, the company contributed $92 million to its non-US pension plans and $61 million to its US plans. During the fourth, MMM's revenue rose 5.8% year-over-year to $8.6 billion, driven by its safety and industrial segment. Its EPS for the quarter climbed to $2.38 versus $1.66 posted in the same period last year. In 2020, distributed 2 billion respirators globally, and the company's CEO and chairman Mike Roman said recently, "We do expect demand in our N95 respirator masks to be strong as we go through the year." Analysts expect MMM's revenue for the quarter ending March 31, 2021 to be $8.5 billion, representing a 5.1% increase year-over-year. Its EPS for the quarter is likely to increase 6.9% to $2.31. Ended yesterday's trading session at $180.66, climbing 10.3% over the past year. During the past 6 months, has gained 15.2%. MMM's strong fundamentals are reflected in its ratings. The stock has an overall rating of B, which equates to buy in our rating system. It has a grade of A for quality, and a B for stability. It is ranked number 37 of 89 stocks in the A-rated industrial, machinery industry. In total, we rate M on 8 different levels. Beyond what we stated above, we have also given MMM's grades for growth, value, sentiment, and momentum. Get all the M ratings here. Lockheed Martin Corporation, LMT. LMT is a global leader in the security and aerospace industry. It is primarily engaged in the research, design, manufacturing, integration and sustainment of technology systems and products and services globally. Aeronautics, rotary and mission systems, missiles and fire control, and space are some of the segments in which it operates. Earlier this month, LMT signed an agreement with India's Hindustan Aeronautics Limited to explore a possible collaboration in the country's aerospace sector. LMT stated that by strengthening its collaboration with India, it is working towards consolidating LMT's global aerospace and defense ecosystem. During the fourth quarter, ended December 31, 2020, LMT's revenue rose 7.3% year-over-year to $17 billion. Its EPS for the quarter climbed to $6.38 from $5.29 posted in the same period last year. The company also entered into an agreement to acquire Aerojet Rocketdyne Holdings during the fourth quarter for $56 per share in cash. A consensus revenue estimate for the quarter ending March 31, 2021 is $16.4 billion, which represents a 4.9% increase year-over-year. Meanwhile, its EPS is likely to grow 3.8% to $6.31. Over the past year, LMT has lost 22.6% to end yesterday's trading session at $337.78. Over the past 6 months, the stock declined 12.1%. The ratings are also favorable for LMT. It has an overall rating of B, which equates to buy in our rating system. LMT has a grade of B for value, stability and quality. It is ranked number 4 in the 69 stock air defense services industry.